Hey guys, welcome to a new video. So it's been a pretty volatile and bad few weeks in the market, and what I've realized from that, and it's probably from hindsight, is that I've made a bit of a mistake, if you want to call it that. I'm a bit too overexposed, taking a bit too much risk in certain areas. So that's what I'm going to talk about today, how I'm addressing that. None of us are perfect, and we all have to learn from some of the decisions that we're making. So that's what I want to make sure I do, is that I'm proactive in terms of the decisions that I make, and that I learn from them, and we move on, we get better, and we create this unimaginable wealth. But before we get into it, of course, I do have the disclaimer: this video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please always do your own research. So it's been a bad few weeks, specifically for crypto, but also for tech and AI, and pretty much the whole stock market. And people will say, "Oh, we're at all-time highs. It's not that bad." And of course, the high yield ETFs suffer like immeasurably. Accordingly, they suffer worse than the underlying. So when the stock market's bad, then the high yield space does even worse, because they're trying to capture that NAV, and they're either using leverage or they're uncapped upside. It's kind of like that distribution, that yield has got to be paid somehow. So there's always a compromise somewhere. But I thought this was a good example of the mistake or learning that I've realized from, over the past couple of weeks, but from over the past 6 months of what I've been doing wrong. Now, my strategy is to basically DCA, like dollar cost average. If something's going down, a dollar cost average into it, because if I fundamentally believe in the underlying stock, then I always believe that it's going to bounce back, right? So I'm buying a dip, so I buy a dip and I dollar cost average into it, in the hope that it will rebound. Now, in the case of MicroStrategy, we all know that it's been performing terribly over the last few months. Well, it seems like forever, actually. But so I want to show you what I do. So these are all my buy. This is Snowball Analytics. Someone asked me about it. This is I've just signed up to Snowball Analytics. It's pretty good. I'm getting used to it, so I'm just getting a feel for it. But this is my MSTW position. So Roundhill MicroStrategy position, the MSTW ETF, which which is now my biggest position in my high yield portfolio. Okay, so my strategy is when things are dipping, because I was still in the belief that we're in a bull market, is that I'm going to buy the dip. I'm going to DCA into it. Oh, I bought the dip here. Oh, we're on the rebound, and I'm thinking that maybe it goes up and up. And then when it dips again, I'll buy the dip again, and then it keeps dipping, and I'm buying the dip. I'm like, we're just reinvesting all the distributions that I make, and I'm buying the dip into MSTW. And look, it goes up a bit. There's a bit of hope, and it dips again, and I'm buying this dip. These are all buys, right? These are all just me buying shares. These dots here, and then it goes up, and we're back on. The bull market is on, and it dips again. Oh shit! I've got to buy the dip again. I've got to keep buying. I've got to, got to lower my average cost price. Got to keep buying the dip. All right, we're going up. No, we're down again, right? It just keeps going down. So I'm just buying. And what I've realized is that I'm too heavily exposed to crypto. Like, too much of my money is going into MicroStrategy as one position, and too much of it is going into Bitcoin and crypto. I'm just too heavily exposed to it. So we're in a situation right now where Bitcoin's hovering around $90,000. All of these Coinbase, MSTW, they're all just tanking. They're getting hammered. And so my realization is that I still believe in the DCA strategy, because I believe that at some point, eventually we're going to hit a bottom. Whether we go into a bear market, we don't. That seems to be the big debate at the moment. Are we in a bear market, or are we going into a bear market, or is this a bear trap and we're going to absolutely blitz higher? No one, in my opinion, no one really knows. Like, people are talking about technicals, fundamentals. It doesn't matter. No one actually knows what's going to happen. But my thesis remains the same, is that I DCA into it. Now, what I've learned, though, is that because I'm too heavily exposed, is that my DCAing is way too often. So so you see there's just too many dots on here. Like, I'm investing way too heavily into this one position. And it's got me feeling that now I'm down quite a bit on this position, quite heavily. And it doesn't feel good, does it? It feels bad, like you're in pain. You're emotionally like, have I made the wrong decision? And it's like, is it going to return? Is it going to recover? and it will eventually, but it's still, the emotional pain hurts. And so my learning from this is that I need to. I still think the DCA strategy is the one. It's the right strategy for me. It might not be for you, but for me, I think it's a great strategy because, like when Bitcoin's in a bear market, you buy as it's going down. You buy every week. Like that's my strategy for buying Bitcoin in a bear market. Just buy every week when it's in a bear market, and it'll go up. But eventually, you're buying that dip, and as it comes back up, and then when it starts going up, you stop buying. Okay, so you just DCA. You're getting a low average price, and eventually it'll rebound. The problem here is that I'm investing too much, right? So I'm just buying too many at too many times. I should just reduce this by like, to almost 25% of this. So buy here, one, buy here, one, buy here, one, buy one here, one, buy here, one. Instead of like 100 buys, I have maybe 10 or 15 on here. And therefore, I'm way less exposed to crypto and Bitcoin and MicroStrategy, and I free up some funds to be more allocated into other areas, something safe, maybe like an NVIDY or a basket fund, an index fund, whatever. And I think that's just what I've learned. So I'm not perfect. You shouldn't follow me blindly. You shouldn't follow anyone blindly on YouTube because no one really is going to get it right 100% of the time. And as I said, I'm just learning on this journey as I go. I'm trying to make the best decisions. But I think this is an important learning, and that I'm too heavily exposed into crypto. And what I've actually started doing is building an ideal high yield portfolio spreadsheet with allocations like crypto, AI and tech, index, basket funds, maybe even some shorts, probably not because they're a little bit risky, but you know what I mean? Like, so allocations, percentages, they get into the whole shebang, right? To get really granular into the data of it so that I don't make this mistake in future. Okay, so I just think that's really important to cover, and I'll share that ideal high yield portfolio kind of spreadsheet with you at some point once I've finished it, because I'm still kind of building it out. But just an insight that I thought I'd share, and also what I'm doing off the back of it. Now I've made a play. I'm trying to buy more into. I'm less in AI tech and more in Bitcoin and crypto. So my last video was all about REXSHARES ETFs, the high yield space, and how they've released these new ones and how these were actually beating, 3 out of 4 of them were beating the ROUNDHILL ETFs in terms of total returns. So kind of quite surprising, as ROUNDHILL definitely seems to be the number one player at the moment, with REX a bit quieter. And I think that's just because they've only had 4 funds up until recently, and they've just released these guys. Now, CWII, I've had my eye on for a while as a kind of a growth stock, actually. And then when I saw that REX were launching this growth and income ETF, I was pretty interested about it, and I've been keeping my eye on it. And so it's a growth and income ETF for CWII. Now, what is CWII? CWII is in the AI computing space. It's heavily integrated with NVIDY. They have a big partnership. NVIDIA actually invests heavily into CWII, and they, as I said, they're quite heavily intertwined. So CWII, if NVIDIA does well, then CWII will probably do well. Now, this is like the other REXSHARES ETFs. It has half of its portfolio is uncapped upside. So that's what I like, uncapped upside. And half of it is weekly income via a covered call strategy. So I've talked about this before, where it's kind of a mesh between YIELDMAX and ROUNDHILL. You kind of have a bit of leverage in there because it targets 1.25 times exposure. So a little bit of leverage, but only half of it is actually exposed to that upside potential and that downside potential. So there's limited downside compared to ROUNDHILL, but there's also uncapped upside compared to YIELDMAX. So it's kind of a best of both worlds in a sense. And then obviously, you've got the covered call strategy for income. So it's balanced growth and income. So I think they're great funds. REX and ROUNDHILL, they're the two for me. REX is a little bit less risky. ROUNDHILL is a little bit more risky because it's a pure leverage play. It's 120%. If it goes up or down, you're gonna bear the brunt of that 120% downside, right? So, CWII, what is it? So it's an AI computing stock business, heavily integrated with NVIDIA, and it hasn't been doing that well. This is the chart for CoreWeave. CRWV is the ticker, and as you can see, from June it was like at an all-time high, 182, and it came down, went up again, and it's down. That's kind of been bottoming out around here, and this is what I had my eye on. So I've been keeping an eye on this area here. So we look at the 3 months. It's kind of been, if we go 1 month, it's kind of been bottoming out. This is like a pretty much a buy zone in my opinion. Like it could go down further, because I'm looking at the CWII ETF, and I want to get more into these AI tech plays whilst the market has been going down quite a bit, and relinquishing some of my Bitcoin and crypto exposure and getting more into opportunities, the other opportunities in the market that I see, especially with REX, because I don't have any REX ETFs. I'm not holding any positions with them, but I think they are possibly even better than Roundhill at the moment. If they release some of these new funds and they are consistent with this strategy, there's less downside risks. I think they could do really well. So CoreWeave, what is it? So I think this tweet is quite interesting because it's essentially showing how core the NVIDIA partnership is with CoreWeave. So NVIDIA actually invest heavily in CoreWeave. They're not just a partner. They don't just use their AI, their computing technology, but they also invest heavily into CoreWeave. And so this just shows if Jensen, who's the founder of NVIDIA, still believes in CoreWeave, then I do too. I'm smart enough to know that I'm not smarter than him, long at $73. So they're just saying that they're very long and bullish on CoreWeave in comparison to some of these others. So it just shows that CoreWeave is heavily integrated with NVIDIA. Now, we just had NVIDIA earnings, and they were very good. And I actually thought that NVIDIA earnings would probably come out quite positive. So I actually I went ahead and bought some of CWII just around about here, somewhere here, right? Just literally a couple of days ago. Okay. Now the chart hasn't updated. Hold on a second. If we go here, so NVIDIA earnings. So at the time of recording, we just had NVIDIA earnings, so we're in aftermarket hours. So NVIDIA earnings came out. NVIDIA's up like 8 or 9%. And guess what? So is CoreWeave. So I bought it a couple of days ago around this kind of price zone, and it's now, CoreWeave has now gone up 8 or 9%. So I only bought a small position because I wasn't sure which way it was going to go. And if it went down, I was just going to DCA into it. Now, learning from my mistake of not DCAing continuously as it went down, but maybe waiting for a 5% drop and buying another bit and another 5%, because I fundamentally believe that this company is going to do very well. And I think that if we look at the some of the technicals, if we go to the forecast here for CoreWeave, you'll see that the analysts really are quite bullish on CoreWeave. So it's up aftermarket. Look, this shows it's up 10% in aftermarket hours, CoreWeave. So it's gone from $74, and I bought CWII, the REX ETF, when CoreWeave was around $75, and CoreWeave has gone up 10%. So I'm pretty happy with that. I've only got a small position in it, but I'm just showcasing what I'm doing to try and make some different moves and take an opportunity in this market when it was dipping. So I bought before NVIDIA's earnings were released at around this price point, 74.92, 75, and now it's shot up to 82. So I should see that. It hasn't come out in the, it hasn't showcased in the actual CWII ETF yet, because I think the volume is really small. It doesn't showcase the after hours or overnight trading hours share price. But anyway, this is the forecast and the analyst ratings for CoreWeave. So you'll see that the current price is 74. It's now post-market 82, but there's a price target of $131. So it's almost double. Like, it's a big price target. So we're down here, and obviously the all-time high was up here. And the analysts fully seem to believe that it will get back up to at least middle ground. That's the average price target, $131, or potentially even get up to $234. So quite bullish. So you got 14 analysts saying that it's a strong buy, 2 saying it's a buy, 13 saying it's a hold, 1 sell, 1 strong sell. But for me, going on the fundamentals, the fact that I don't believe that AI is a bubble, the earnings are just too good. So I took a small position in this, and we'll see how it goes. If it then retracts and goes down, then I'll average into it, but not as much as I have been with MSTW or some of my crypto plays. So just thought I'd share that with you. I think it could be a really good opportunity. This ETF with CoreWeave, I'm quite bullish on the stock from everything that I've researched and read about it. It's getting a lot of chat on Twitter, and so many people are investing into it. So a lot smarter people than myself. So that gives me hope that it will do well in the near future and actually the long-term future. It's supposed to be a good stock to invest in, apparently. We shall see. But anyway, thought I'd share that with you. I hope that was of some value, and thanks for watching. Please like and subscribe, and I'll see you in the next one, guys. Cheers.